Hi viewers, in this video we are presenting amalgamation. Already in the previous video we are given about amalgamation introduction. In the sequence of the video here presenting journal entries in the books of the transferor company. In the amalgamation, two companies are mentioned. One is transferor company and another one is transferee company. So, here given journal entries for transferor company. In the transferor company, before amalgamating, having balance sheet with assets and liabilities. So, these all our assets and liabilities are transferred to realization for amalgamation purpose. Actually, the realization account are introduced in the partnership accounts. So, the same procedure will be followed for amalgamation also. However, we are giving total journal entries for transferor company. So, first one is for closing all assets which are taken over by transferee company. Then realization account to debitor to sundry account. So, here sundry assets are transferred individually at their book values. Of course, in the balance sheet, sundry debtors, stock, bills receivables, furniture, land and buildings, these are written as a individually, like as realization account to debtor to sundry debtors account to furniture account to land and buildings account to stock account, etc. So here definitely write their book values only. Second one, for closing all liabilities which are taken over by transferee company. Liabilities account to debtor to realization account. Here also total liabilities are recorded individually at their book values only. And third one, equity share capital, accumulated profits and reserves are transferred to equity shareholders account. Why? Because these all items are belongs to equity shareholders account, then not transferred to realization account. So this type of entry purpose, share capital account debtor, reserve fund account debtor, dividend equalization fund account debtor, contingency fund account debtor, workmen compensation fund account debtor, insurance fund account debtor, profit and loss account debtor to equity shareholders account. Why? Because these are debiting all the items. These above said items are shown in the balance in the liability side. Liability side means credit items. Credit items cancellation purpose, these are debited. Then all the items are debited, then transferred to shareholders. So shareholders are credited. Next one, equity shareholders claim reduced by debit balance of profit and loss account and fictitious assets are not written off. Then not claim accounts also transfer for shareholders. In this purpose, equity shareholders are debited, then all the expenses or losses are credited. So journal entry is equity shareholders account debtor to profit and loss account debit balance to preliminary expenses account to discount on shares and debentures account to underwriting commission account to share issue expenses account. So these four entries purpose we are given complete note point of view. Why? Because these four are taken from balance sheet. So balance sheet closing purpose, first one is before closing the books of transferor company, the balance sheet should be in proper form. Definitely try to show the in a proper form of transferor company. And second one, all above stated entries are made from balance sheet. So take the balance sheet only for the writing of entries. And third one, fictitious assets like preliminary expenses, discount or commission on issue of shares and debentures, debit balance of profit and loss account are not to be transferred to realization account. These are directly transferred to equity shareholders account. So in the previous fourth entry already we are informed the losses or expenses or any other fictitious items. These are totally transferred to equity shareholders only, not to realization account. And next point, if some provision has been made on an asset, such an asset is transferred to realization account at gross figure and its provision is transferred along with liabilities. So try to understand this point. If any assets having provisions, the provisions are transferred to realization account with liabilities, then the assets are transferred to realization account with gross figure. So not deducted provisions from mentioned assets. And next one is goodwill and other intangible assets like prepaid expenses, trademarks, patent rights are always transferred to realization account at the values given in the balance sheet. So intangible assets like goodwill, trademarks, patent rights, these are transferred to realization with the balance sheet amount only. And next one is assets which are not taken over by transferee company not to be transferred to realization account. Sometimes the transferee company not taken assets, so these assets are not transferred to realization account. Next one, accumulated profits like credit balance of profit and loss account, reserve, dividend equalization reserve, capital reserve, etc. are not to be transferred to realization account. Instead, these are directly transferred to equity shareholders account. So, credit balance of profit and loss account, these are called as a profit, and reserves, dividend equalization funds, capital reserves. So these are directly goes to equity shareholders. Then these amounts are not transferred to realization account. And last one is liabilities which are not taken by transferee company not to be transferred to realization account. So however sometimes transferee company some liabilities are not taking, then the liabilities are not transferred to realization account. Next entry, fifth entry now, Note points are completed, then entries. For recording purchase consideration due, if due purpose transferee company account to debtor to realization account. Next entry. For receiving purchase consideration account, cash or bank account to debtor, shares in transferee company account debtor to transferee company. Next entry. On sale of assets not taken over by the transferee company. So, transferee company not taking assets we are sold to in the open market. Then bank account debtor, realization account debtor to assets account. Next entry. On sale of unrecorded assets. If sometimes assets are not recorded in the balance sheet, then the assets are sold in the open market. Then realization account to debtor to bank account. Next entry. For payment of liquidation expenses. These expenses borne by transferor company by itself. Realization account to debtor to bank account. Next entry. For payment of unrecorded liability. So, some liabilities are also not recorded in the balance sheet. If we are paid for such liabilities, the entry is realization account to debtor to bank account. If realization account shows profits, after all the transactions we are discovered in the realization account profit or loss. If discovered profit, then the entry is realization account to debtor to equity shareholders account. If loss, then reverse the entry, that is equity shareholders account to debtor to realization account. Then finally last entry is for payment of equity shareholders. So we are total amount conclusion purpose paid to equity shareholders. Then the entry is equity shareholders account debtor to bank account to shares in transferee company account. So these are the journal entries in the transferor company. In the next video we are given journal entries about transferee company. All the best.